Question 16. What are the differences between items and accounts? Answer. Items, products and services that you sell. They are used on transactions such as invoices and purchase orders. All items must point to an account. Accounts, categories in which financial transactions are organized into reports such as profit and loss and balance sheet. Some accounts carry balances such as accounts receivable and accounts payable. Some accounts report information over a period of time such as income and expenses. Question 17. What is the difference between accrual and cash basis? Answer. Accrual represents financial transactions and activities as they occur, such as rent expenses that always exists every month and are recorded whether they are paid or not. Only in accrual basis you will have accounts payable, accounts receivable, prepaid expense asset and customer deposit liabilities. When there is a difference the time the transaction happens and the time that the actual payment is made. Cash basis will only report income and expenses as they are paid. Question 18. What is the difference between entering a bill and bill payment and writing a check? Answer. Entering a bill is to incur an expense the moment it exists and it's paid in the future. Accounts payable. Write check is to record an expense at the same time it is being paid. No time difference between date of the expense and date of payment. You must use the pay bills feature in QuickBooks to mark the bill. Accounts payable paid. Using the write check feature would potentially duplicate the expense and overstate your liabilities. Question 19. What are the steps to take to accept a customer's payment and record it in the bank? Answer. 2 steps. Click on Receive Payments and select Client and Invoice to apply payment to. This will increase your own deposited funds account. Then click on Record Deposit after it is taken to the bank and record all payments that are being deposited together in a single transaction to match the bank. Question 20. What do you look for when analyzing financial reports? Answer. Consistency, such as expenses that are expected to repeat every month and income matching the business activities. Common sense. Do the numbers make sense or are the numbers expected? Generally, there should be no negative numbers unless there is a refund. You are aware of trends and relationships, such as sales going down or expenses going up. Also the percentage of direct costs versus revenue, etc. Question 21. What is the difference between profit and loss report and the balance sheet report? Answer. P&L shows activities, income and expenses to arrive to net income profit for a specific time period. Balance sheet shows values, assets and liabilities to arrive to equity net worth as of a specific date. The net income from the profit and loss passes through the equity section in the balance sheet. Question 22. How do you get QuickBooks financial reports to Excel and why would you do that? Answer. Open any report, click on Excel button and then create new worksheet. You must have Excel installed in your computer. You would export to Excel to be able to manipulate the numbers, search for data, statistical analysis, creating graphs. Question 23. When reconciling a bank account, where does the value of the beginning balance come from? Where does the ending balance come from? Answer. Beginning balance comes from bank statement and it is also last month's reconciled balance. The ending balance comes from bank statement and equals the total amount of cleared transactions. Question 24. What is the purpose of reconciling the bank account? What are you supposed to do with the transactions that did not reconcile? Answer. By reconciling you make sure that all transactions that went through the bank are also present in your accounting system. Cash transactions that did not flow through the bank cannot be reconciled using bank statements. Items not reconciled are either pending for the following month or, if they are a mistake or duplicated, they must be deleted. Question 25. What is the difference between cost of goods sold and operating expenses? Answer. Cost of goods sold are directly attributed to a sale. They only exist because the sale exists, such as the cost of inventory sold. Subcontractor expense. A total sale minus COGS is used to calculate gross margin or gross profit. Operating expenses usually are not directly correlated to a sale and are fixed, such as rent and utilities. Question 26. What is the purpose of using a sales order instead of an invoice? Answer. Sales order record a sale approved by client but not affect inventory or accounting. Invoice is to finalize sales once the product/service has been delivered. A sales order can create a back order which lets you sell what you do not have but commits that inventory to that customer when it arrives instead of showing as available for sale. Question 27. You are setting up a QuickBooks file from scratch for a company that has been open for many years. How do you handle opening balances of assets and liabilities? How should you enter AR or AP opening balances? Answer. Enter a journal entry for all balance sheet items using last year's tax return or financial statement prepared by accountant. Also, the opening balances could be created when new accounts are created in the chart of accounts. For inventory items, they must be entered with beginning balances as they are created in QuickBooks using the item list. AR and AP must be entered by creating customers or vendors with an opening balance. Question 28. What are the most important QuickBooks tips for a beginner and to speed up the work? Answer. Check the date. Wrong dates give you the wrong reports. Always use tab instead of enter. Enter tends to do the opposite of what you want. Home page. Use the home page when lost to find what you are looking for. Respect accounting. Accounting rules such as revenue recognition and expenses matching allow for better understanding the reports. Shortcuts. Speed up data entry process, especially with dates. Always reconcile accounts and get rid of unreconciled, often duplicate, transactions. Question 29. Why is QuickBooks used in such a different way by tax preparers versus a QuickBooks user doing bookkeeping, managing a business? Answer. Tax preparers and people that input data once per year just enter deposits and expenses and do not deal with accounts payable or accounts receivable, which means they are working on cash basis, where QuickBooks users doing bookkeeping typically enter day-to-day transactions and deal with open invoices (AR) and open bills (AP), which means they are working on accrual basis. Question 30. What are the most important accounting topics to learn and have in mind in order to understand the work being performed in QuickBooks? Answer. Accounting principles. Consistency, such as seeing the same expenses monthly on the reports. Direct/variable costs go into COGS and indirect/fixed costs go into expenses. Revenue recognition, such as having a consistent policy on invoice dates driven by delivery date or service completion date. Expense matching, such as making sure that expenses follow the income even if they are not paid by creating the bills on the correct dates. Comparability, such as being able to compare this month with last year's same month.